All right, I should be sharing my screen now. GG and Green, I'm up around 4 or 5 hours. I think 4 hours net, not 5 hours net. I had three winners and three losers. I'll discuss all of them once we are done with those trades here. B-Tang, nice streak there. Okay, so this trade right here, this trade was sent to me by Peter. He's a member in our VVT community, and he asked me about this trade. His question was whether he got unlucky or whether this trade was bad. I really like this one. Now, by the way, this yellow dash line right here, not dash, just a yellow line right here, is the high of the 60-minute consolidation. So the 60-minute consolidating, and there was an XPEP a week right here. Remember what we said? You could go against 1 week. If there is only 1 week, you could go against it. If it's multiple weeks, you try to avoid it. So what setup is this? 5-minute opening range breakout. On the 2-minute chart, it went all the way above view up and above all the moving averages after breaking down. He took it to the long side before the breakout. Yes, it would have been way better to wait for the breakout. But in my opinion, even if you enter a little bit earlier before the breakout, it is still not bad. Because usually if you wait for the breakout, you will get slippage. This case you wouldn't have, but usually after the breakout you get slippage, your entry is a little bit worse, and if you have everything in your favor before the breakout, you could definitely try that. He gets about here. My advice right here was just to simply continue watching the price action. If you get subbed out once, it doesn't mean that the setup failed. When will the setup fail? The setup will fail after it breaks this level down here, 45.60. After it breaks it, and maybe does anything like this, the setup's failed. As long as it's still holding, it's still good. And even if it fails, it doesn't mean that you can't trade it. If it breaks the range to the opposite direction and does something like that, you could always take it to the short side, to the opposite direction for the setup. And this is what happened to me on most of my trades today. Let me share my screen. Let me share my trades quickly before we start, actually. And there it is, this XPEP. And by the way, this is what we love, right? We'll love it when they break to one direction first, and then they squeeze to the opposite direction. That would have been a really good long round here, and then look at this. This is what we've been waiting for, right? So let me show you what happened today on most of my trades. This is one of them, DDD, and my plan on this one was to trade it to the long side. Why is that? The daily chart was really good. I knew we're really extended on the daily chart. We're up 300% in less than a week, so we could drop to the downside as well. My main goal, though, was to trade to the long side based on how I see the 60-minute chart. And I told myself, if we break up or set up for a breakup, I would take it to the long side, first target, second target, third target. So long net right at the open. Let me go to the minute chart back a little bit. There it is, right at the open. Long net, had my stop loss down here. Those were really small partials, 20% because there is no reason to partial, 20% because there is no reason to partial. This would have been a big partial for me, around 50%. It didn't reach it, dropped against me, exited at break even. Now look, what setup happened here? This is my favorite breakout. When it breaks to one direction first, and then squeezes back all the way for a break of the second direction. Now my entry wasn't at the break of the second direction. My entry was somewhere in the middle. And I told you, the moment the stock goes into the middle of the range, we are starting to get interested in a short. We don't immediately take it to the short. We start to get interested in a short. Now I was interested in a short, and at the same time I see a setup, a 5-minute open range breakdown, which coincides with the break of the low of the day. I took it to the short side, put my stop loss up there, and then partialed all the way down there. Unfortunately, too many partials. I'm not happy about that, but that was it. The same thing happened here on NKLA. Looking at the daily chart, I thought that we might, after this doji right here, break down today and go all the way down here to the $15. I wasn't really expecting long on this setup. So I see my range. I see selling pressure. I see also a red candle. And I told myself, if we break, I'll go to this. Previous day close here and then here. I initiated my position in the pre-market to the short side. Instead, what happened? I'm getting squeezed all the way back into the middle of the range, bailing on my trade. And look, what is this setup here on the 1 minute chart? It's not the cleanest, but it's enough clean, I think. Yeah, exactly, Gio. This is an ABCD pattern here. I waited for a new low. I wanted to see a new low on the 1 minute chart before I get into my position. Look at this, higher low, higher low, higher low, higher low, higher low. I could have taken it anywhere right there to the long side, but I want to see a pullback closer to the 9. Why is that? Just to feel that this is the next leg up, to know where to put my stop loss at. If I take it anywhere there to the long side, my stop loss would have been somewhere around here at least. Once I saw a new low and I saw a squeeze back up, I took it to the long side. This ABCD pattern on the 1 minute chart coincided with a 5 minute open range breakout, and it also coincided with what? A break of the range with the opposite direction. So first we broke down, then we squeezed all the way back up. I love those. Took it to the long side again, over partials, but there it is, long, stop loss, first partial at around 2 to 1, maybe a little bit more, maybe a little bit less, I don't know. And then all the way up there. Now, I had also a few losers. I think it was PLTR, yeah, PLTR. I traded this thing to the long side. I like the daily chart. I like the 60-minute chart. Took it to the long side in the pre-market for the break, and unfortunately, it didn't work out. It went into the middle, and I'm out. So this was a loser. Didn't work out. Didn't work 100% of the time. The key is just to manage your losers at 1 hour and your winners at more than 2 hours, if possible. Now it went all the way down here, but I don't know. I didn't like the short side, and I just avoided to trade it. GVO was another loser I've taken. And this one was good, but the timing was a little bit off. So good 60-minute chart, the same thing. We gapped up on the daily chart. Overall, the daily chart looks strong to me. I see that we can go all the way at least here and then to the levels I have drawn up there. Now, what did I do? I took it to the long side after we broke down. So we went all the way down. Remember what we said? Stock would go all the way down, not making you low, and then squeeze back up. And that's what I was waiting for. I saw that we went all the way down, didn't make a new low, squeezed all the way back up, where I took it to the long side and added to my position and put my stop loss somewhere in the middle. Unfortunately, it got me out, but I could have re-entered a little bit later. Why? Because there is a pattern here. Bearish engulfing sandwich. Entry, 530. New range formed. Stop loss, 525. 5 cent stop loss. 2 hours right here. So I should have re-entered on this one, but I think I was barely almost at my goal sitting in those 2 trades, so I didn't just initiate any position. I should have held on more to this trade because this right here was 300% up, and once it started selling off on the daily chart, I expected it to drop more, but again, this is me trading my PNL, which is bad, and it's something I'm going to work on as well. Do you know how I can increase the size of the last price? The red line, MB, right click, chart area, config area, there it is, last sale price, and you could increase it here. The price in the arrow? Even in the arrows, you could all change them around here. Right, chart area, config area. Oh, unless you mean that one right there. I'm not sure about that, to be honest. Maybe it's this. It's also there. I can't really tell. Let's see. It's here, yeah, but I don't think you can increase the size on it. You could just change the background color and text color, and that's it. All right, so let's see how you guys did. Let me just turn off that second monitor I have to the left of me. Something is wrong with it sometimes. Okay, that's good. So Dargan, you traded Baidu. I've had Baidu on my watch list today, on my secondary actually. Let's take a look at the charts. This is the 30-minute chart right here. I'm not sure what chart is this, maybe the 15 in the pre-market. This is the daily, no, this might be the 60. Anyway, so there is a range around here, and then did market around here, and this is what we love. Fake breakdown to one direction, and then squeeze all the way back up to the opposite direction. After this squeeze up, you want to take a position to the long side, and I would do that like 100% times in a row. Along with that, you're having a setup, bullish engulfing crack, where it makes a new 5-minute high. And there it is in the 1-minute chart, breaking the pre-market high, breaking the pattern. It's ready. Took it to the long side. Now, what will be your stop loss here, guys? Because the tricky part around here, when it does these V moves, is the stop loss. You can't have your stop loss down here. It will be bad. So what would be your stop losses? New 1-minute low. New 1-minute low, Geo. Okay, I like that. Chart on the right is the 1 minute. Oh, there it is, the 1 minute here actually, but here, still, your stop was down here. Okay, I like that. Okay, this is a little bit tight though. In this case, I wouldn't have used it here. I would have used this as my stop loss or this as my stop loss. Not that tight. Especially that this one is $228 price stock. What's the spread on Baidu? Anyone knows? Quick check. I think the spread will be at least 5-6 cents, right? Let me check it here quickly. Baidu. Yeah, so look, the spread could be up to 20 cents. Like right now, the spread there is 30 cents. You don't want to have these type of stop losses on this type of stocks. Why is that? If it goes against you, you could lose way more than you expected to lose. If it goes in your favor, I bet the reward could be amazing, right? Like with your stop loss, what you made right here definitely was so good. But you should expect that the price could go against you. So personally, I like this setup right here, and I like it here. This is actually a bullish engulfing crack on the 15. I thought it's the 5. It's a move on the 5-minute chart, V reversal on the 5-minute chart, breaking the high. If I take this thing to the long side, I would use at least half of this candle right here for my stop or down there. Other than that, this was good. Then even with momentum, you need to keep stop loss a little bit wider, because within the minute, it's not moving like this, right? Even with momentum, it goes like this, right? And this right here could cause you to lose a lot. A small pullback. Your partials though were good. You're welcome, good job. And be there more than simple breakouts on the 60-minute chart. Sometimes it could you could get into an unlucky day where it breaks to the one direction, squeezes all the way to the opposite direction, then you short it, it goes down, and then it starts chopping. So this way you get stopped here and you get stopped here, but other than that, they're good. Now let's see what you did right here. 3 breakout attempts. Bailed quickly after the first 2, and then the third worked out. So what's the issue here? Anyone? Even here, I'm glad that it worked out, but its stall was not the 3 exactly low. Stop loss. Stop loss here tight, and here tight. Could have been stopped out one more time. Now, right here, at least you have something different. Right here, you see the breakout, clear breakout, right? And even this wasn't so clear because you still had a level a little bit close to you, right? Now, when you take any stock to the long side or to the short side, remember what you said, the tightest stop loss you could have is at least a new 1-minute low. And you had that. Like, I see your line. I bet your line here was your original stop loss. But for some reason, you got yourself out earlier on both of them, right, Ivan? So the best stop loss in this case, the best one, would have been the low, the last level where it bounced from. The tightest thing you could do is a new low right here, because yet you still didn't form a range. Now looking at this long consolidation around here for a few minutes, you could establish a range. You could draw a range, right? You could draw something like this. And you could tell yourself, okay, if we break up, I would take it to the long side and I would have my stop loss at the middle of the range. And this is the safest and the best stop loss in my opinion in this type of place. You could tighten it and you could have it at least at a new 1 minute low, previous new 1 minute low, or the half of the previous 1 minute low. And then partial like you did right there. So I'm glad that it worked out, but respect your stop loss because your plan from the beginning, it was right. The stop wasn't ideal, right? At this entry, this should have been your stop loss. Hold it, hold it, hold it. Shakeout candle coming back up. Now you're having a range. You're having a breakout out to your position and partial all the way up. You're welcome, Matt FCAL. Let's see what you did right there. So this, I agree with you. This should have been a really good entry for a breakout, guys, right? There it is. Nice range. Even around here, if you manage to get in a little bit earlier, because you will be having only 1 week against you and going against 1 week is good. If you manage to get in there, if the smaller time frames are giving you an entry, that would have been so good. And that around there is around 1710. 1710 is somewhere around here. Look at this. Breaking out small ABCD pattern. Exactly. I like that. This is a perfect potential entry for a 15-minute open range breakout or a breakout pattern. After the breakout, we know what? There is a retest and then a trend or a continuation. So after the breakout, there is a retest. And this retest could get exactly to the level, it could get closer to it, and it could go a little bit below and bounce. In this case, it got closer to it. There is the continuation. It's an ABCD pattern. Got your entry to the long side. One issue, so early partials. An ABCD pattern is a breakout pattern. You could partial earlier if you hit the 2 Rs. It's totally fine. But your 2 Rs should not be around here, in my opinion, based on the stop loss. And if your stop loss is here, this was less than 1 R, safest stop loss just to give it a small extra room below it, or use these bodies right here. And then partial all the way up. I like the entry, everything, right? Stop loss widen it a little bit, just in case, depending on how the 5-minute chart looks like, because I can't see the 5 around here. And hold on to your winner. Nice patience waiting for the setup though. $20 risk made $35. That's almost 2 hours. That's good. But if you held on to it, even with your stop loss around here, this could have been way more, right? Look at this. Entry 1760, stop loss 1750, and it made a move to 1810. That's around 6-hour move. If you start partialing a 2-hour move, 1780, and then just take 25, 25, 25, 25, or 20, 20, 20, 20%, you could end up with at least 3.5 hours reward, because your first partial at 2, and then you partial all the way back up to 6. You will get the average of the distance between 2 and 6, right, which is 4. So you could easily get 3.5 hours instead of having 1.8. Yeah, it's so good. Anything bigger than 1 hour is good. Marvin also traded FCL. Oh, and the same pattern right here. Look at this. So you both saw the same thing. The difference is Matt entered here at the breakout or closer to the C level. You entered at the breakout. Let's take a look at the 5-minute chart. This is also 3-bar play around here on the 5-minute chart. Now, I don't really like an entry up here, to be honest, and I like it somewhere down there. Why is that? Anyone? I think you'll be able to answer it. If not, I'll tell you the reason. Why does it make sense to enter down here, but not up here? Okay, that's good, Chris. I like it. This is the third. Okay, not this, the third, right? This could consider be the second. So when we start below, we don't count. We count as long as we start above the 9 on the file. Now this is the first, this is the second, this is still the second, it's almost the third, right? So if you enter anywhere within the second candle, which Matt did right there, it's still decent. But on the third candle, you don't want to enter, because usually after 3 candles, it's expected to have a pullback, right? It made a little bit of a bigger move for a 4th candle, and then it started pulling back. And now we know that the pullback could go all the way to the 9 moving average, right? And the 9 moving average is an average. It could get closer to it, touch it, or break a little bit below it. And because the entry was late, look at your exit. Your exit was almost to the penny before it started working out. So what could you have done right here? You could, if you enter right here, you could have exited at break even, because right here you are having a setup for a parabolic reversal. It's not a parabolic reversal, but it's double top with a fake breakout. You could exit at break even right there. Or you could enter to the long side around here. What's that? You are at the 9 moving average on the 5-minute chart with a W shape on the 1-minute chart, making a new high after a confirmation candle, which is a hammer, getting increasing volume for a breakout on an ABCD pattern. Long, stop out, and try to get your partial. If you don't get it, exit the break even, because now you are forming a double top, which is a reversal pattern. So yeah, this was late, but entry here is good. Remember, best entries on the first candle, and the first candle right here is here. If you manage to get an entry around here, this is the best thing you could get. Decent entries on the second, but never enter on the third, because most of the time there will be a pullback after the third. You're welcome. Let's see what Geo did there. So Geo traded FCAL. So look at this. This is basically the same thing, right? You enter, it's considered to be almost the second, but it's the beginning of the third. And after the third, we expect that there will be sort of pullback there, right? So safer would have been to enter at least here to get the good risk to reward. Unfortunately, that didn't happen. And you added on the way where it's a trap, right? We said when we see an ABCD pattern forming on the 1-minute chart, but that ABCD pattern happens on the third candle, we try to avoid it, because usually it's trap and the price pulls back after that. An entry was good, but there was no need for an add, but good exit though. The exit was really good. Nina? Let's see what you did there. Okay, Nina, I think this is the 1-minute chart and this plug. Let's open DAS first, and I'll show you what were the good possible entries right there, right? Testing algos. They work, right, Gio? So look at these guys. Plug. Okay, I see this. What is the main reason not to trade plug? And I didn't even have it in my watch list today. Okay, that's good. You see, guys, you know it. If a stock does this in the pre-market, most of the time after market open, what it does, it sells off. In this case, it gave us an ABCD pattern, which is a breakout, and some will enter it for the breakout, for a continuation. It makes a small move after the breakout, which is literally nothing in comparison to this move. And then what happens? A chop, 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 chop. If you see this in the pre-market, even if one day you like it and you see that it's doing like triple of the move after market open, just avoid it, because most of the time this will be happening. And it's just my advice. If something is happening, if there is a move like this in the pre-market, just don't trade it after market open, because those stocks tend to be choppy. They look so clean in the pre-market, so nice ABCD pattern type 1, but after market open, they just do nothing. And it's a loss of money right there. Now, let's ignore this part and let's go back to your trades, because the other issue you had in your trades is the stop loss. On all of them, stop losses were really tight. First of all, the entry is late. We don't really want to go to the long side on the way up. And we don't want to go to the long side on the way down. Remember this. If the stock is making higher highs candle like this, you don't want to take it to the long side on the way up. Then if the stock is dropping down, you don't really want to take it on the way down. You could do that in the future when you are more advanced and when you could predict what is the end of the pullback. But for now, to be safe and still that work, and I still do that, enter after pullbacks first. This is the safest. Never go to the long on the way up, never go long on the way down. At least enter after the pullback. This entry was on the way up and it was into the 200 moving average, which is strong moving average and could act as resistance, and you got sold out. Then you try to take it to the long side on the way down, which also didn't work out. And finally, you are getting it after the pullback, which worked out really well. Well, now you are taking it to the long side on the way up, which didn't work out. Now you are taking it after consolidation, which worked out, right? Now it's pulling back and it's coming back up. You took it to the long side, which could have worked out. So you see, those trades, according to this rule, shouldn't have been taken, and you would have had 1 win, 2 wins, 3 wins, which unfortunately was a break even. Now, next thing is the stop losses. Never have a stop loss within the candle. Tightest thing you could have as stop loss is a new 1 minute low. This is the tightest, and I still wouldn't go for a new 1 minute low all the time. In this case, maybe yes, I would go for around half of the range or a new 1 minute low right there. Right here, I'll put it for a new 1 minute low. On this case, I will put it on a new 1 minute low. Right here, also, I would put it somewhere down here. So look at this. These shouldn't have been taken according to our rules. And these shouldn't have been taken according to our rules. And now with the stop loss, at least a new 1 minute low, at least a new 1 minute low, at least a new 1 minute low, you would have had 3 winners instead of 2 winners and 1 loser. So focus on stop losses. And there are different webinars. Stop losses, there is not only one rule which you could implement on every single stock you are trading. Go through different webinars we have, because each setup, whether it's a mountain pass, whether it's, I don't know, a VPA play, whether it's a break of the high of the day, whether it's a parabolic reversal, ABCD pattern, breakout, they have different rules for their stops. And you need to be familiar with them, and you need to know what setup are you getting into, or at least what does this trade you are taking look like, just to know where to put your stop loss at. So good job, and let's see what Mike did right here. Okay, Mike traded FCAL as well, and you took it to the long side right here. Now this I wouldn't have done. Why? It was a winner, and I like it. But why wouldn't we take this one? Below view up. Okay, that's one reason I like that. Within the range, even worse than that, below the range, that's it. And a lot of resistance, good. So look at this, we are having sort of a range around here. And we are breaking it to the downside. And after the breakdown, we could expect a retest and a continuation. Like, this is the usual thing which could happen, right? And this retest, it could bounce off any level, moving average, view up, another moving average, daily level, anything. It could bounce off any level and then break down, right? So you took it after the breakdown. This here, I would have totally avoided. This right here is decent. Why is that? Because look at this. It's breaking down. After the breakdown, it goes all the way into the middle of the range. Now we're interested in taking it to the long side. We don't simply pull the buy trigger because it's in the middle. We, after that, take a look at the 5-minute chart and see if there is a setup. And is there a setup? Yes, it's a 10-minute opening range breakout after double hammers. You took it to the long side. I like that. Stop loss really good. Partial early, right? With your entry around here and your stop loss here, this was less than 1 hour. Be patient. This partial is decent. I mean, I know it's not 2 hours, but at least there is a reason to take partial around here. It is the pre-market high, and sometimes stocks could just reverse after that. And you see, it just struggled a little bit around the pre-market high before the continuation. Those should be really small partials, right? Because now you broke, there is literally no reason to partial, but every time it's going in your favor, you want to lock in some profits. Now, this wasn't necessary. Why? What would we be waiting for around here? $17.30. We're breaking it. Yeah, that's it, Mike. After the breakout, we could expect a retest. before a continuation. So that's what I would have been waiting for, and this right here would have been a good place to consider adding. So you add around here, partial all the way up, it's dropping down one more time, it's still holding, right? Adding, this is an amazing add, I love it. Like, you caught it in a really good place. Partial up there, and I would have been sold out around here. Honestly, I would have been sold out. Why is that? Because there is sort of fake breakout, and it's a reversal pattern. It's starting to drop back down. I already added somewhere around here, maybe somewhere around here. I would have added also at the break. My average is already messed up. It's going against me and breaking the level around here. I would expect it to drop back down. If you re-enter though, around here, it will be good, because around now you're starting to form an ascending triangle, which is not that clear. There is a shakeout down here, but this should have been good. You actually survived it. I like that. So look at this. Mike actually held his stop loss at a good technical level. He knew that the stock still could retest and could hold this level around here, survive this pullback, and partial right at the good place. So look at this. This is an amazing add, and this is an amazing partial. You nailed the bottom and the top both times. That's amazing, actually. Now that was really cool. I love that. I love how you managed it. And I'm going to be honest with you. You managed this one way better than I would have, because I know what I would have done in this trade. I would have added first around here. I would have held it around here, and I would have added somewhere around here. I would have partial there. My average will be messed up. It will be breaking against me. I will get stopped out there. I will re-enter here for a scalp. This would have been my thought process on this thing. You managed to do this even better than I would. You added right at the bottom instead of at the break. You held your stop loss at a good place, and you caught the right target up there. So good job, Mike. So let's see what Aaron did here. Aaron traded plug, and let's get the yellow color here. So plug we discussed, right? Where is plug? Where is plug? Where is plug? Plug we would honestly try to avoid trading. Those are transparent triangles, right? Okay, not bad. This way is not bad. So I guess you were long biased. You definitely were long biased on it because of the pre-market. So you started taking it or buying it at the dip, which worked out really well. Get stopped out, and you started rebuying at the dip, which worked out well. I'm not sure if those were partials and adds or those were stops, because that was a little bit messed up right there. If you get stopped out on this small range right there, it would mean that you need to reconsider placing your the levels where you put your stop loss at least at a new 1 minute low to survive the pullbacks. Good partials right there. Another add and a partial. Now, this worked out really well, and I think the main reason is because you managed to enter at the dip, but be careful trading those stocks. Stocks which make a huge move in the pre-market, sometimes they do this, like literally this, to the penny. Break out 1 penny, and then they'll just never start coming back up. Maybe later on the day they'll make small continuation before another dip. They're ugly. I tried to trade those, and I just came up to the rule which is telling me any stock making a huge move in the pre-market should not be traded. Are you talking about plug, MB? Black box trading. Yeah, MB, just take a look at the pre-market. If you see that the stock is making way bigger move than the average true range in the pre-market, it means the market open will be choppy. And there are those are different. Some of them are doing like this move, and then they do this in the pre-market, and some of them are making this move but decently, something like this. Like those are tolerable, but still I wouldn't trade them. Those are definitely an X for me. And plug was exactly that play. Look at this. Straight up and then this. Like this is what I don't like. If it at least did it like this, and then market opens around here, I would have considered it, but still I doubt I would have traded it. Bobby, let's see what you did. What's there? OSTK. So you tried this thing for a parabolic reversal, I guess. Let's open OSTK first. And the first thing, that wasn't a parabolic reversal. And why wasn't it parabolic reversal? Because it was not going up in a parabolic move. Let me open again your screenshot. Where is it? Not this. Did I close it? Am I that bad? No, I didn't close it, right? Okay. That was at around 11:35. 11:35. So look at this. If you just draw the line, this thing isn't parabolic. For it to be parabolic, it needs to move like this, or at least like this. If the stock is not parabolic, when are we shorting it? You still can short it if it's extended or extended from the 9 and the 5. You could still trade it. But when will we short these type of stocks, which are moving like this? One exception. You could short it, but there should be what? Pattern higher friends. Okay, that could be a reason. I doubt I would have taken an extreme reversal, though on this one it's really strong. Retest, not really. Okay, I'm going to tell you what. Should be at least a double top. Like Peter's Mountain Pass maybe, or something. Exactly makes it, that's it. So if the stock is going like this, the only reason you could take it to the short side is only if it's giving you a double top on the one. And remember, this double top on the 1 minute chart should happen along with it still being extended from the 9 and the 5. If this double top happens around here on the 5 minute chart, on the 1 minute chart, and the 5 is already close to the 9, you just don't take it. If it's extended from the 9, like kind of like right here, it is not parabolic, but it is extended from the 9 and the 5, I would wait for a double top, and I would short it, and I would target the 9 and the 5. So this right here worked out. Would I have traded it? Honestly, I might have, for one reason. This is an obvious level around here with a breakout and a new low. But still, let's just ignore the level, ignore the average true range and all that. I wouldn't trade it in normal occasion unless you're having a double top with it being extended from the 9 and the 5. Yeah, this was crazy. Like, I don't know why it made this move today. Yes, Sal, I still post them on YouTube. I have the last 2 weeks trade review session posted on YouTube already. Twin traders, let's see what you did there. You always wish to be in that best runner, right? It was amazing. Okay, Twitter today. You traded Twitter. Now let's take a look. Okay, why didn't we watch Twitter today? That was clean. That was amazing. Look at this. Nice range on the 60-minute chart. I love this reverse hammer on the 60-minute chart before market open. What's happening there? A fake breakout, right? A fake breakout, and then it squeezed back down into the low of the range with a setup 5-minute open range breakdown. This is literally the same setup, not literally, but it's enough close to the trade where I've taken my it's really similar to the DDD trade and NKLA, but this one is a little bit more obvious right there. So this would have been a really good entry to the short. Now after that short, what do we expect? We expect a retest, right? Breakdown, retest, and a continuation. Here that there was no retest, there was a trend. The retest is around here. 48.50, 48.50, there it is. Oh, it is actually the retest. Let's see. It's close enough, actually, not bad. So breakdown, retest, continuation. Take it for a reverse ABCD pattern. I like that, but for some reason you exited. Why did you go there? Let's see. Okay, so I see that. Now, looking at the 5-minute chart, now why is this? Is it normal to hold through this, or why would it have been good to hold through this pullback here? Anyone? Yeah, that's it. Twin traders, you know that. Geo as well, that's good as well. Break even is not a technical level, and we know that stocks after 3 consecutive candles, 1, 2, 3, usually make a pullback, and that pullback is usually going to the 9-moving average on the 5-minute chart, and then the trend happens. It could happen immediately, and it could form the type 1, and then work down a little bit later. So the entry was amazing. I love it. Unfortunately, you exited break even, then you re-entered, but the stop loss should be the level C. It never went to your stop loss. So you see both of your entries right there, or maybe all the 3, could have been really good winners. It's totally fine. Don't get bothered by getting stopped out. Eventually, you will correct your mistakes. You will know that you've been doing this for a lot of times, and that causes you to lose. So you need to do the opposite, and you will hold, which will work in the future. Brandon, let's see what you did. The entry was good. The setup was good, and that's what really matters. Management will come slower. The level C, the last level it bounced from. So the stock is dropping down, it's pulling back, it's coming back down. You take it to the short side here. Let's say those are the candles. Your stop loss is C because you're still within the range. After you are breaking the range, you could add to your position and you could move your stop loss into the middle. And with your trade here, look at this. You are still within the range. Your stop loss is C until you break it, where you could move it into the middle, add and move it into the middle. Branded traded plug. Okay, you got it in the pre-market. I like that. This is good. So right here, you're having a range, and there it is. Trading it to the long side for the break of the range, and then partial all the way up. Now, the only reason right here which didn't make it look good is this. The huge move in the pre-market. If the stock does this, I would usually avoid it. Or try to enter earlier because the break of the range was here. I think you marked it though later after market open. This would have been a good entry, and if you manage to enter here and have your stop loss somewhere down here, even the middle, because this is the break of the range, you would have made 2, 3, 4 Rs up there. The entry was a little bit late, but still not bad because it broke, it retested, and it continued. That was good, but again, this would have just made me avoid taking the trade. The setup itself was good, Brando. Aqib, your trade here was on plug as well. So a lot of you guys had plug in your watch list. Totally fine. Again, if you see these type of trades, you could totally keep trading them. If they work for you, it's just my advice. And that didn't work for me. You might figure out a good setup to trade those. And I told you the setup which I thought about trading those stocks is short, because a lot of times they drop down. The problem is catching the short. I didn't figure out when to try to short them. When is it the right time to short them? So if I figured out that, will be amazing. Maybe in the future, not now. Who knows, right? But it's really good to think of short setup for these types of trades. Now, you took it to the long side up there, got sold out, re-entered up here. So yeah, right here, I definitely wouldn't have taken it to the long side. And there is a reason. Actually, that was a member I was mentoring, and he gave me this rule. Look at this. He taught me this. I think it's Gigi. Gigi, are you here? Let him say it. If Gigi is here, he'll know that. Yeah. Why wouldn't you have taken this trade? Look at these guys. Exactly. Thank you, Gigi. So this is a rule Gigi gave me, and he said that he noticed that every time if the stock is making a huge move to the upper side and it literally touches the pre-market high, like to the penny, and the rule here is to the penny, it usually drops after that. So if he takes a position to the long side around here and his stop loss is down there, then the stock bounces exactly from the pre-market high and starts dropping back down. He would either exit for a small profit or he would exit at break even. If the stock breaks up or doesn't reach the pre-market, he might hold on for his original stop loss. But if it does this, like literally to the pre-market and starts dropping down, he wouldn't just hold on to his position. So you took your trade to the long side after it literally bounced off the pre-market high. And that would have been the main reason for me to avoid this trade. It is very powerful, Gigi. And thank you for that. That actually helped me a lot in my trading as well. Now that saves me from a lot of losers. And you see how we could also learn from a lot of members here. 1, 2, 3 with the 3-bar play, batch. Yeah, so the 3 pattern play or 3 candle play, it's like this. It's so simple. It's 3 bars. White bar candle, small bar candle, and then once the next candle breaks up, you take it to the long side, stop loss the low, and you partial on the very same candle. Partial, not full exit. This is it. 1, 2, 3. You don't trade it alone. You try to combine it. Yeah, you try to combine it with another pattern you have or a bigger picture you have. So do you have any questions, guys? I think Mexi wanted me to take a look at TSM, right? Let's take a look quickly at TSM. TSM. Oh, TSM is not looking bad for a short, actually. I agree with that. The problem is on the 1-minute chart, it like sold off so much already. Am I looking at TSM? This just doesn't make sense to me. What is this price action here? 1240. Okay. Yeah. Okay. I see. Yeah. This is late now. I thought this was happening here. Now it's honestly looking more for a week. I would be interested in it to the short side below this. We're having increasing volumes at the low of the day, which is a reversal sign. Let's see if we had something earlier as well on volume down there. Yeah, we even had that there. Look at these. Those spikes of volume closer to the low, to the low, to the low, to the low. I don't like that. But if we break this level, it could be a decent short all the way down here and then even below. But we see how it's getting bought around the 50 every time. Let's see that while. FCL, that's amazing. I like that. Where is the 1-minute chart? 1 minute or 2 minutes? Okay, that's good. So you start taking it in the pre-market. Remember, if you're starting a position in the pre-market, widen your stop loss. Actually, your stop loss was really good in the pre-market. I like that. Long got subbed out, unfortunately. Long it one more time and got subbed out. That's totally fine, actually. Both of them were really fine. One reason I wouldn't have taken it to the long there is the waves. It's waving down. So I would have been careful about longing it there. This right here was a good long. Why is that? Because we broke down, and after the breakdown, we squeezed back up. So you take it to the long side, and unfortunately, it got you out. Right here, it got you out. This was good. This I would have avoided. This was good, and this re-entry was amazing. I like that while. Okay, Marvin. 3 consecutive 5-minute candles is when the stock is making higher highs and higher lows in 3 candles. This could be white, this could be white, this could be red. It's still third. Then white, fourth. You see? The count stops once the stock makes a new low and then starts new candles. This will be 1, this will be 2. As long as the stock is making higher highs and higher lows, no matter what is the color, it is 1. If you're having a candle within, like here, another candle, and then you're having this here, the count will be different as well. Why is that? because this candle is within this candle. It didn't make higher high and higher low, but it's still within, right? So this is still a second, and then this is third. Market makers ruin your weekend. They ruin all our weekends. But really good job. I like that you didn't give up. You kept watching it. As long as the setup is valid, keep watching your stock. Matt, I use that for trends to know when to get in. And if the stock is making 3 consecutive candles above the 9 and the 5, I don't get my entry on the 3rd. I wait for a pullback and then a continuation. Or I use that to catch reversals. I get entry to the short here, and I target the 9 EMA on the 5-minute chart. You could watch my webinar, How to Catch a Falling Knife, Type 1, or Part 1. I talk about this a little bit, and watch my ABCD pattern webinar, Part 2. I also explain it there. On an upward trend, I don't use it because I don't enter on the 3rd. I wait for it to pull back, and then I get my entry. But on, but I take it to the short around there and target the 9 down here. Yeah, Lou, I know how that hurts. I hate when that happens. Have a good day, Dardan. Yeah, we're actually done here. I will upload this trade review session to YouTube in like a few minutes. If you guys have any questions, feel free to email me, ayman@bearbulletraders.com. I post my trades also on Twitter. If you don't follow me there, you can follow me there and check my trades there. You could ask me any questions there. Have a good day, everyone, and trade safe. You are going to continue trading.